So before we get to my current profile update, I did on Wednesday record me making some changes to my account. So this is a recording of what I did on Wednesday. So I'll walk it through. It's only 2 minutes long, but just to show you what's on the screen right now. At the time Wednesday morning, I had a cash balance of 40,716, assuming all these options expire worthless 23 days from now. And the current account value is at 36,637 if I was to close all these trades at that moment. And I only had $1,000 in buying power. So if the market took a big dump, then obviously I'll be in maintenance. And I think I was in maintenance overnight because the market was down, but it gapped up. So technically, the brokerage was asking me to deposit $50, and because I've been with them for so long, they give me a long time to even manage my plays to cover any maintenance calls that I may have. I think for me, right now, it's around 2 weeks. The last time I spoke to customer support, they'll give me around 2 weeks to handle any maintenance calls that they would want me to take care of. They don't immediately just start selling my positions, which is a good thing because usually all I need is a week or a day, especially considering I only do TQQQ and TNA. So I'll go ahead and play this. So my thinking was that I wanted to lower the strike prices just in case the market did dump again, and I'll have better cash balance available for Thursday and Friday should that happen. But obviously, hindsight's 2020. The market continued to rally, and we closed Friday around $77. So if I would have known that, or if I would just left everything alone, I could have collected an extra $300, which you'll see right now. So basically, $373 because these are the two that I closed, and then I roll over this $78 put for next week. So I'll go ahead and play it right now, and then now you can actually see, at least on the web version, what it looks like when I'm making some of these plays. So pretty simple, and you'll see how much it costs me to do all this stuff, and I'll pause it. So right now it's telling me here's the difference between the bid and the ask. Usually I go right in the middle so I can get executed right away. If I did an ask, I'll be leaving money on the table or paying more. So technically I'll pay $102 instead of $99 to close this put. So originally, which one is it? 74. So originally I got a credit of $279, but I'm about to give 100 of that dollars back. So I've only collected, $179 essentially. Or you can see right here, $181 is how much I'm about to net after I close this. You'll see the values up here change from 40,700 to right now 40,600. And you see my cash balance went from 1,000 to 4,000 because it releases the collateral. So same thing for this strike. And actually, just so you can see a little bit more information. As soon as it pops back up. So same thing, bid and ask, how many contracts I have, if I'm buying or selling, the strike day that it closes. So when you see me open up new ones, you'll see the collateral that it costs me to do this. So we can let it run real quick. So now the $78 strike price that I ever had, the 78.5 that expired on Friday, I'm rolling it over till next week's because obviously TQQQ is at the time was $75. And I was thinking we was gonna have a little drop, but it closed at 77. So who knows what happened next week, but so me rolling over is closing it like I did with the other ones, and then reopening a new one for next week. And now instead of me paying $1.30, I'm collecting another $130 on top of, does it show? Let me see. So you see this right here, right now, if it was to close expire worthless, I'll collect $557. So now this should change to about 600, 700, or 600 and some change, $680, because I'm adding another $100 on top of the credit that I've already been trying to collect these past few weeks, since all I've been doing is rolling it over for like the past 3 weeks, I think. And I think I even opened this one up already far out the money. So usually when you're selling puts, you want it below the current price. But sometimes I like to collect more, especially after a big drop. So let's say if I was open one right now, I could potentially open one up for 2 weeks out at $77 to collect a lot more premium, assuming I think the market is going to rally and close 2 weeks from now at $77 for TQQQ. So I'll show you another time what I mean by that. I'll actually record me doing it if I ever have another opportunity. So you can see right here, right now I'm at 40,344. After I do this one, it should go up by another $100 instead of going down. And right now I have $11,000 in cash because I freed up some premium. So there you go. It just went up. The 11,000 stayed exactly the same because I didn't do anything but just transfer the money over. Now what I'm gonna do is, because I got so much cash and the market to me was at a good price, I did want to open up one now and then save some cash for Thursday or Friday, which obviously well, you don't know yet, but I did open up more. I just didn't record it. So you can see all the ones I have right now. So on the web version, you pick your strike going out. So just to recap, the reason why I'm doing all this is because before I had 74s and I wanted to lower my costs just in case the market did dip again. And I wasn't willing to wait for that dip, but I did want to have some cash on the side and also be in some more plays just in case it doesn't dip, which obviously it didn't dip. But these are for next week's anyway, July 17th expiration. So going to the mid, because I don't want to wait forever to get filled on the ass. So I just take the mid, which is $1.96 times 100 is $196. I'm going to buy two of them. So it should come out to like $390 or so. So I'm collecting $390.65 minus all the fees. So that's the net that I'm collecting. And you'll see it up here where it says 40,473. That it'll change as soon as I collect this because they give you the money right away. And to hold this contract is going to cost me $6,000 in my cash from this 11,000 to open this, and I'll be left with about $5,000. But if the market does drop, they're going to want me to add on to this, assuming it drops like the closer we get to expirations. If it was to drop last week, aka Friday, last Friday, I already know my brokerage won't care. They won't do anything. They'll leave my total cost around $6,000. They only want you to add more to this put to make it more cash secured. If it drops dramatically and extremely quick and it stays that low, then they'll start asking me, hey, we need you to add some more cash to cover your plays, which I could do that. I could add more cash, but I'm trying not to. I'm just letting this account ride. So usually what I'll do is I'll sell some of the puts that's already in the money, which I have, I mean, not in the money, that I have profits on, which I have a lot already in profit. So, no, that was a long explanation, but you'll see right now I'm about to collect 390. It'll change up here. So now, essentially, I stand to collect 40,860. Right now, I'm at 36,663. So, green is good. Usually, I go by the open. So, if anything is in the open that's green, that means I could close it and just pay back some of the premium if I needed more cash. So, it's not a big deal to me. That's why I don't care if the market drops. So, that's that. Now, let's go to my actual account right now. So, Here's where we at right now. So you saw I was at 36, but the market rallied, so now I'm at 37.5. So far this month, it's fluctuated between $5,000. So before you guys saw I was at 40,000 and some change. Now I'm at 41,000 because I did add another contract. So here's all my current positions. So I still have $48,000 left to collect. Right now I've only collected 1,292 of this, which means right now I'm at 3,544. So technically I still have $3,500 to collect. Total would be 4837, and that's what would get me to this $41,000 number. So that's the plays. Now let's go check my actual dashboard that I use to track all this. One moment. Actually, one thing that I do want to show is I haven't shown this in a while, but my standings versus the two indexes that I track. So Nasdaq is up 20%, S&P 500 is up 15%, and I'm already up 32%. With all things being equal, of everything starting the same day I started, which was April 6th. As you can see right here, I was at 0. When the market drops, mine drops, and obviously it drops a lot more because one, I'm leveraged, and two, it goes by off the options price, not my realized loss. And then when it goes up, same thing. It goes off my options price and not my realized gains. So obviously, if I was to be at 41,000, that's the 32% that they're talking about, not the $37,000. So you can see it all right here. So I'm at $37,000. I made 8,753 so far realized, but I still have another $3,500 to collect. That'll get me at that 41,000. Now we can go to my dashboard. So as you can see, this is just an export from my Schwab. So it takes the direct numbers from Schwab. I don't change nothing. Obviously, all I do is just export it and then import it onto my dashboard. So same number, the $41,000 number, I'll be up 12,002, assuming everything expires worthless a month from now. What is this? 42% of the way of having collected 29,200, which is the starting balance, which means I would have made 100%. So I'm almost halfway there. I still need $16,000 to go. My goal is to at least make 50% this year. Obviously, I'm killing it. I'm already 84% of the way there, but a lot can happen between now and April of next year. So, like I say, I'll be happy with a 50% return. Obviously, I'm, on track to make a hell of a lot more than that. Collected $25,000 in premium, gave back 13,000 of that by various opening and closings of options and strikes, and I've netted, well, not netted yet, but I have a potential to net 12,000 too. Just a chart of how my account's going. Projection. So I stand to make 198%, assuming I keep doing what I'm doing. Right now I'm up 42%, assuming everything closes and expires worthless. So I know on the Schwab, if I still got it up. So I did look into it. This 32% number comes from the $37,000 number. This 42% number comes from the 41,000 net, assuming all my options expire worthless. So far, I'm averaging $240.56 a day, and on average, I'm doing 9 days for every expiration of contracts, and this is coming from the last 30 days of trading. This one is if I compound, which I am compounding. So if I do compound, I'll be around 106,000 come April 6th, 2027. If I don't compound, I'll be around 87,285. And if I wasn't taking any withdrawals, let's say I start paying myself $1,000 a month, then the numbers change. I'll be at $91,000. Milestones. So 6 weeks from now, I should be around 50K. 28 weeks, 100K. 58 weeks, or yeah, 58.2 weeks, 250. So by April of next year or August of next year, I'll be at 250K. And according to this, I'll reach a million in 2028, July 1st. We'll see if that stays the same, if it goes down, if it goes up. This is always going to change based off the last 30 days projection. And for some reason, 60 days doesn't show. So I got to work on that. So now, the best part I like come and look at is what did I do this week? So for this week, I made 3.58% and I collected 1,470 from a total of 2,331, which means I gave back $860 in premium, which you kind of saw why that happens because I gave back $300 alone just closing those contracts to free up some cash. So far this month, I'm at $2,000 or 4.92%, and I'm averaging around 7.48%, including the beginning month where I didn't really have a set goal yet. But regardless, these are numbers. So far, saying my return is 29.92%, which this is the average return. So it's taken the very low months that I had and the very well, July is not even over yet. So this number, this 29% is always going to be in discrepancy with this one right here, just because this isn't an average. This is just like my last projections based off 30 days. This is a net average of all these months. So when the year is over, whatever this average is, that's because it's taken, let's say, a month where I don't do any trades. It's going to take that into consideration. And hopefully they'll like get more congruent, once the year all comes up. Once the year comes up. Then here's the trades I did so far in July. So starting from July 1st, I'm at 2,078 net. You can pause it and look at them. I'm not going to go over them. But green is me collecting. Red is me either closing. Well, they're just red is me closing no matter what type of close it is, whether I'm rolling it over or just flattening out buying it to close. So I think that's pretty much it. I'm very excited for this account still. Um, I do have other accounts. Maybe I'm thinking about showing the strategies I'm doing for those. I haven't bought any calls with this account yet. I have another account where I'm buying leaps and then I'm selling covered calls against those, or I'm doing calendar spreads or just regular debit spreads. So there's a lot of other stuff you can do. Right now, I'm just keeping it simple with doing puts. These aren't cash secured. Some of them are cash secured. Majority of them are not. I'm using leverage from my brokerage. So that's why if you saw earlier the $6,000, it only required me to use that because basically my brokerage is paying 50% or more of the cash that I need. So I got to keep that in mind when the market drops that, hey, if it keeps dropping, my brokerage is going to want more cash. So either I close them sooner or I deposit more cash, which I'm going to try not to do that just so you guys can see what happens if you don't. So I'm not going to let myself get margin called. I'll just close them and take a little loss considering I'm up already a lot more than where I should be. This yellow line is where I should be. I should be only up $3,000 by now, which obviously I'm up a lot more than that. So I think that's it.